One, Mr. Edwin has rightly introduced me, and I won't need to go through the stress of introducing myself again. But it would be nice for me to know my audience. So if you can just help me put in the chat box your name, what you do, so that I can have an idea of the people that I'm talking to. So just put your name, and if you're into any business, just your name and the business you do, so I can understand or have an idea of those that I am talking to. So today I will be talking to us about accounting and bookkeeping. So most times we usually don't really understand the difference between accounting and bookkeeping. They are both very closely related. It's just that accounting is just like an extension of bookkeeping. So as business owners, as people who are not really vast in the field of accounting, you've not been trained in the field of accounting, so the thing you can do is bookkeeping. But when you move from bookkeeping and you start engaging in interpretation and interpretation of financial information and explaining to users, that's when you can now say that you are going into the field of accounting. So today I will be sharing my knowledge, and I would like this class to be as interactive and practical as possible. So if you have any question along the line, you can just drop it for me, and I'll make sure that I respond to these questions.
So just to cut you short there, I think you get to present, then at the end of it, you get to ask your questions, because we have like 30 minutes to go. So
okay,
so that we don't have to go back and forth, because these guys can be very
bombard me with questions.
They can bombard you with questions. So if you just spend the whole day, you don't get anything done. So if you just go through your I'm sure you have you want to share your screen to show you.
Yes, I'm going to share
so
the
just
slide.
Go through it
yeah. I'm going to share. First, I'm going to share a slide. Then secondly, I'll just show like a brief Excel or Google Sheets template that we can use to keep records. Then after that, if you don't have any question, you can now ask. So briefly, why accounting? That's even the first thing. What is the benefit, or why is it necessary for us to keep accounting records? So I like to start by sharing a brief story of how accounting all started. So in years ago, when feudal lords started having businesses, they started having so many businesses that they can't be at the same, they can't be at different business venues or location at the same time. So there's a need for them to appoint people to help them manage this business. And when somebody is managing your business for you, you would always want to know how that business is performing. So in the process of giving a report of how a business has performed, you say you are giving an account of that business. So accounting all started, or accounting came about when there was a need, because there is a need for people to give a report of how a business has performed during a particular period of time. So as time goes on, the field of accounting started evolving. So it doesn't just stop with people giving reports for you. You as a business owner, you as an entrepreneur, you need to understand when you are giving a report, how are you going to even understand what you are being given? What can you even look at and say, okay, this is what this business is saying? So that is why it's very important as business owners, as stakeholders in any business, for us to understand what accounting is all about. So today, I'll be talking about bookkeeping. I'll be talking about advantages of bookkeeping to small business owners and important books to keep as an entrepreneur. Then I'll be giving us some tips on how to keep adequate books. So what is bookkeeping? Bookkeeping is just an act of recording on a day-to-day basis the financial transactions that happen in a business. So, for example, maybe I'm into buying and selling. When I buy my supplies and I pay, that is a transaction. Even when I buy and I didn't pay immediately, that is another transaction. When I make sales, whether on credit or I collected cash immediately, that is a transaction. So the act of keeping all these records on a day-to-day basis, not allowing it to pile up. When you allow things to pile up for months before you start recording, that's a bad bookkeeping approach. So a good business owner, a good entrepreneur who is very, very interested in understanding the growth or the performance of his business or business is meant to keep on a day-to-day basis the records and information pertaining to his or her business. So that act of keeping those records is what we call bookkeeping. Then after keeping records, after keeping it, calculating, what do they call it? Calculating and going to interpretation of those records. That is when we now can call it accounting. But as business owners now, we might not really understand the act of interpreting records, the act of computing, analyzing, and doing all those aspects. So we won't be reaching that level in the course of this evening. But what is important to us and what we should know is that keeping records is one of the most important things that you can do for your business. Because even when you decide to bring in an external person to help you analyze what has happened in your business, that person will be demanding for what? For records. That person will be asking you things like, what is your sales level? What is your expenses level? How much have you incurred on this? How much have you incurred on that? So if you don't keep your records on a day-to-day basis, it will be difficult for you to understand how that business has performed during a period of time. It could be a week, it could be a month, it could be a year. You could want to know how the business has performed over the last 2, 3, or 5 years. So if you don't keep records, if you don't do what is called bookkeeping, it will be difficult for you to be able to achieve this. So what are the examples of transactions that happen in our day-to-day business? We have things like cash sales. When you sell goods, some of us might not be into buying and selling. Some of us might be into rendering of services. But when you render services and you collect your cash immediately, that is a transaction that you should record. Also, we have things like cash purchases, credit sales, credit purchase, cash expenses, credit expenses, cash deposits to bank, and cash withdrawals from banks. There could other things that could happen, but like you taking loans, you lending people money, your business giving out loans, or you give loans to your staff. These are all examples of transactions that could happen in a business on a day-to-day basis. And anytime any of these transactions occur, it is very important for us to keep a record of that transaction. So when we talk about techniques, when you are keeping transactions, when you are keeping records, what are those things that are important for you to do? So each of every transaction is supposed to come with what we call a supporting document. Because all these advantages of having a good record goes to the extent of even when people like the tax bodies come to ask you for your tax returns. So if you are claiming that you've incurred some expenses, a taxman could come and say, no, these expenses was not incurred on behalf of the business. If you don't have a proof of that transaction, there is no way you can convince this man that I incurred these expenses on behalf of the business. So for every transaction that occurs, there must be a documentation for it. It could be a receipt, an invoice, your bank teller, a purchase order, or anything to just a voucher, anything that can serve as a proof that this transaction occur, it is important for you to keep them, because these are what we call source documents. Before you can enter a transaction into your cash book or into your, if you use softwares, before you can keep those transactions, there must be something that will serve as a proof. And it is what accountants call source documents. And this could be receipts or invoices or vouchers or bank tellers or anything. Just ensure that for every transaction that happens in the course of your business, you have an adequate proof that that transaction occurred in or for that business. So who are bookkeepers? Bookkeepers are people that are engaged to manage financial data for companies. Most times people engage bookkeepers, but as SMEs and small businesses, we might not have that capacity to start employing people. That is why it is necessary for us to even understand this thing. And even if you have the capacity to employ someone, it is always good for you to have a knowledge of what that person is doing. So having the knowledge doesn't mean you have to be by yourself, but you need to understand what that person is doing. So when that person gives you reports, or when that person gives you your records, you should understand what has happened. So without bookkeeping, companies would not even be aware of their financial position or be aware of what occurs within the company. So also another importance for proper bookkeeping is that it helps you to be able to track all information of things that has happened. So we see situation of you selling on credit, and in the future, things like, no, I have paid, no, you've not paid me, no, I've paid so amount. So if you don't keep adequate records, if you don't have proper records of what has happened, it will make it difficult for you to track things that has happened in the business. So also it is crucial for external users. It includes your investors, your financial institution, and the government. The government falls under like the tax authority, as I mentioned earlier. So if you don't keep proper books of records, number one, you won't even be able to know what has been your revenue for that year. You won't be able to appropriately account for all your expenses that has been incurred on behalf of the business. And there's a possibility that you won't even be able to know what your profit is for that year. And when you are supposed to pay taxes on profits, if you can't account or if you can't prove that these expenses was incurred for the business, then you might end up paying higher tax than what you are supposed to pay. Or maybe you need investors. Someone wants to invest in your business. And investors would invest based on what the possibilities that they've seen in your business. So how can you show an investor that you've been able to make so sales from, or you've been able to improve your sales from so year to another year, if you don't have adequate records of how that business has performed? And if you want to get financial vehicle from financial institutions, accurate bookkeeping can help you to be able to achieve all those things at any particular point in time. So I will share this slide later, so for us to have this if you want to go through it later. So these are all the benefits that this can give you, proper accounting can give you. So when we look at accounting, there are two bases. Let's go into the practical aspect now. There are two bases for keeping records. There's one they call the cash basis, and the other one they call it the accrual basis. When we talk about cash basis, we are saying transactions are occurred when cash is paid for it. So in plain terms, if I into buying and selling or I am into rendering of services. When I sell or when I render a service, if I have not received money for it, I will not recognize it if I am using the cash basis. So this basis of keeping records is suitable when you know that you don't engage in credit transactions. That means you have no debtor and you owe nobody debt. So if the kind of business you carry out or your kind of transaction does not involve you buying on credit, you selling on credit, or anybody owing you, it is suitable for you to use the cash basis because you only recognize transaction when you are being paid for it or when you pay for such transactions. But the second one, which is more complex, or it is what most accountants use, is what we call the accrual basis. The accrual basis is used, or the accrual basis is the basis of accounting that recognize transaction when it occurs and not when it is being paid for. So, and this just means that when you render a service or when you make a sale, whether you are being paid for it immediately or whether you pay for that service, whether you pay or not, you are going to recognize that transaction as it occurs. In accounting, we say we recognize transaction when it is earned, not when it is received. So as long as I have performed that duty that enables me to lay claim to that revenue, I will recognize it as my revenue if I am using an accrual basis of accounting. But if I am using a cash basis, I will not recognize it unless I am being paid immediately. So when I'm using the accrual, sorry, it is when I earn it. That is when I will recognize it, not when I have been paid. So this basis of this accrual basis, it is suitable for we that have this basis. It's suitable for those of us that have creditors, that have debtors. If you know that you buy things on credit, if you know that you sell on credit or you render services on credit, it is suitable for you to use an accrual method, because this is only when you can keep track of your debtors, keep track of those that are owing you, and it is better to use this if you engage in anything that has to do with credit. But if all you do does not involve credit at all, it's the best basis for you to use is the cash basis. So as a business owner, what are those? So this is just a table that shows the difference between both. Cash, for cash basis, revenues are recognized when it is received, but when it is accrual, it's recognized when it is earned. But and your expenses also is recognized when it is paid for, but for accrual, it's recognized when it is incurred. So when we talk about bookkeeping methods, so there is basis and there is methods. Now, basis has to do with when you recognize that transaction, but methods has to do with how. We have the double entry and we have the single entry. Now, if you have an accountant or if you have a bookkeeper that is experienced, it is better for that person to use the double entry bookkeeping method, because under this method, it states that every transaction needs to be recognized twice. And it says that for every debit entry, there will be a corresponding credit entry. I know these jargons could be kind of confusing, but in basic language, what double entry is saying is that for every transaction that occurs, there is somebody that is paying and there is somebody that is receiving. So let's say we make sale. When you make sales, yes, sales is giving something out. But another thing that is happening is that money is moving into that organization. So when you record that you are making sales, you also have to record in another separate book that money is coming in. If this thing happened on credit, you have to record that, yes, I have made sales. Then you have also to recognize that I now have a debtor that is owing me money. So when you are using a method where you recognize the two aspects of any transaction that occur, it can be said that you are using a double entry method of bookkeeping. This method is very good because it leaves less room for errors. It allows you to double check your books. So you will know that if my sales, if my inventory, for example, is going down, then my sales is meant to be going up. You can't, if for example, you come to your store and you realize that your level of inventory has gone down, then something else, maybe your sales, your cash, needs to have been affected by money coming in, or you should have known that somebody is owing you now. So when you use double entry methods, it helps to double check to ensure that there's less room for error in the financial system. But when your transaction is not that complex, when you don't have, when maybe what you do is rendering of services and you don't have so many complex situations like creditors, like debtors, like you don't need to keep tracks of inventories and keep tracks of different bank balances, it is good for you to just stick to your single entry. And the single entry store states that when something is immediately sales is happening, you just record, okay, sales of social amount, how much? You just put it there like that. So it is single entry is very simple to use. It is straightforward, and it just helps you to maintain records of your incoming revenue and your outgoing expenses. And this method, this single entry method, is good for just small and private business owners like sole proprietors. So if you are just someone who is rendering services, or you just do who is just into a small business, you can just stick to this single entry bookkeeping. But if what you are doing is complex, if you have multiple bank balance, multiple bank accounts, you have multiple vendors, you have multiple clients that you supply, you have complex transactions like that, the best method to use, or the best methods to recommend for your accountant or your bookkeeper to use, is the double entry method. So single entry can be seen as incomplete because of the simple and easy way of using, and it is not always recommended by accountants. But as I said earlier, if you are just into a small business and you don't have multiple records of vendors to keep tabs on, you can just stick to your single entry method because it is very simple and straightforward to use. So what are those books, or what are those things that you should keep as a business owner? The first is your cash book. The second is the expense book. Then if you have creditors and debtors, you will keep the creditors and debtors book. And if you have if you are someone who buys to sell, or if you buy to produce and sell, you need to have an inventory book also. All these are manual ways of keeping records. In today's age, technology has helped us to just have a single software that can help to keep track of all these things. But before you start using the software, you need to understand what that software is even doing. So that when someone is using software, when you even start using software, you can know what it is expected for that software to do for you. So the software now, in one single software, you can have your cash records, you can have something that to keep your expense for you. You can have something that will track your both your creditors and debtors, and something that will track your inventory. But softwares comes at a cost also. You have to pay for subscription and all those things. If you can't do that, you can just have your simple Excel template and keep all this record in a simple way. So cash book just records of cash transaction, cash sales, cash purchases, and cash expenses. So your expense record just record all the cost of operations that you incur in the business in order to generate revenue. Examples are transportation costs, electricity bills, wages, and salaries. So when you keep records of income, if you don't keep records of expenses, you won't know how much profit you make. So as you are keeping records of your incomes, it is also very, very necessary that you keep the records of your expenses so you can know how much profit have I made at the end of the day. Business owners do make a mistake when money is flowing in, when they are making that sales, revenues is just coming in. They believe, no, the business is going fast. They forget to track what am I incurring to keep this business going. So most times, by the time you now track those expenses, you will realize that, no, I'm not doing well enough. I need to boost my sales. But if you don't keep records of your electricity, your wages, your transportation, there are some of us that we do our businesses right from our parlors. We've forgotten that if we are supposed to allocate an amount as rent, you have forgotten that the electricity bill that you pay in your house, the business is using a part of it. So it is necessary for you to have adequate record of all the cost of operations that your business is incurring in order to generate revenue. So keeping this is just called the expense record. So the creditors and debtors book is just necessary for you to be able to track those that are owing you and those that you are owing also. So it is good for you to have that record, because when you start forgetting those that are owing you money, it is not good for the financial strength of your business. So having adequate records of this would help your business in a long way. Then inventory records are just books that help you to keep records of those inventory. Inventory are those stocks of goods that are yet to be sold, or that are yet to be processed to be sold. You can keep inventory in 3 places. You can have your raw materials, you can have the work in progress, and you can have your finished goods also. If you are into if what you do involve buying raw materials to process into a finished good for you to sell. So it is necessary for you to keep those inventory in their 3 different states: the raw materials, the work in progress, if there are some that are still in process, and the finished goods that are yet to be sold. So at this point, I believe that I have been able to explain the basics of what these all entails. Then I will be closing this one now, and I'll be sharing just a simple Google Sheets template on how you can keep records. And you will also see in these records some of the transactions that has happened in the past that I have kept there. A minute, please. So I hope we can all see my new screen. Please, if you can see my new screen, just please type a yes.
We can see it.
Okay, so this is just an Excel, a Google Sheet that I use to keep record of some of the transactions that happen in our business. I do this because it is necessary for me to keep this particular line of business separately. So if you look at this is a typical example of an expense record. And if you look at this, you'll see that I have my date, I have the description of it, and I have the classification. And under the classification, I have transport and traveling, I have personnel costs, I have rent, I have purchases, and I also have some empty cells in order to record any transaction that might occur but does not fall under this category that I have recognized here. So what are those tips? First, when any transaction occurs, it is important to keep record of the date. The date it occurs, it's important. Then we need to describe it. Is it transportation to so-so place? Is it rent from 1 month to the other? Is it purchase of something? So it is necessary to adequately describe that expense so that even in 2 years to come, when you look at it, you can easily know that, okay, yes, this is what this is referring to. Then you keep it under classification. It would be wrong for us to just be keeping, to just record all these expenses under one classification. But at a point in time, you want to know, okay, how much am I even incurring on transport? How much am I even paying on electricity bills? How much am I even incurring on rent? How much salaries am I even paying? So in order for us to be able to categorize what we are spending on, it is important for us to classify our expenses. So if it is needed, Edwin can reach out to me. I can share a raw template like this that have no transactions if any one of us needs it. So
So what you can do is that you can join our Telegram group and share it there. So that is one reason why you should join our Telegram group, guys. Just click on it. I think it's already said in the SMS in the chat. Just go there, click on the Telegram group. You will join also and share the template there on the group.
All right, fine. So this is just a template to keep records of expenses. And at the end of the day, you have a total. So if you go down, you can see what is the total. You can decide to keep this on a monthly basis. You can decide to keep this on weekly, but based on how fast or how recurrent your transaction is will determine the way you are going to keep yours. So another thing I would say is that, you know, different businesses have different types of transactions. So it's not just good for you to just bring in a generic one. You need to also know what applies to your business. Not all businesses does purchases. Not all businesses does sales. Some is service rendering, and some are buying and selling. So depending on your kind of business will determine the type of classification you are going to have in that business. So just similarly, something like this, you can have it under your cash sales or your revenue also. What you just need to do is to have the date, the description, and the amount. If you have numerous bank accounts, you can decide to put the bank there. If the revenue comes into a particular bank, you put it. If it is cash, you put it. That will be, so under this is classification for expenses now. When it is classification for revenue, if you have different types of goods that you sell, it will be good for you to keep the sales for you to be able to track how much each of those goods is giving you, not just to lump all the sales together. Keep your transaction based on the types of goods. If it is services, based on the particular services, so that you can even know, okay, which of my line of products is performing best, which one is the least performing. If you want to decide whether to let go of one, you would know which one are you letting go. If you want to, you know, control your costs, if you don't classify well, you won't know which of the costs you need to control. You won't know which of the one you are supposed to keep better tracks of. So having this is just the simple way you can use to keep this transaction. So, but if you don't want to do this, you can go ahead and engage softwares. There are different software out there that we can use. There are the foreign ones, and there are also the local ones that we can use. Examples are things like Zero, Accountia, Sage, QuickBooks. These are all tools that we can use. Also, I'll be joining the Telegram group, so I'll be sharing the links to some of these tools that we can use. So if we now have further question on how to use one or the other, we can ask in the group, and I can provide answer to it. So at this point, I believe I have used my time judiciously, and if there are any questions or any area of clarification that you want me to shed more light into, this is the time that you can ask. I appreciate it. Appreciating everyone for paying rapt attention to me, and thank you for this opportunity to impact my little knowledge that I have with you.
Thank you so much, Olusegun. Thank you so much for your very interesting talk. Thank you for presenting. Thank you for showing us your tools. Thank you for everything you're able to pass on. I really appreciate your time. I thank you very much. So because we are way past time that we had planned to stay, I'm not going to have to take one question. Does anybody have a question, please? Anyone? If you have a question, just indicate in the message. Raise your hand so you can ask. Does anyone have a question? No? Okay. On that, okay, someone has a question. Someone has a question. Okay, you can unmute your mic and speak, please.
I just want to appreciate the presenter. Thank you very much. This is a very short presentation that is well explained. In fact, I've gained a lot from this. So I just want to thank you for that. Thank you very much. God bless you, sir.
You're welcome.
All right, thank you so much. So on that note, Segun will be joining us. Segun will be joining us in our Telegram group, where we have a chance to express. I'm sure he but then you have to get to have access to him in the Telegram group. You can be able to ask any questions that you have. I'm sure I wish we could spend more time, because I know that this is a very broad topic and there's so much that we can talk about. But of course, we need of time, and we need to leave soon, and we have to close this. But there's a lot more. I think the next level after bookkeeping is financial modeling. And I'm sure that if you can join our Telegram group, you can interact with him. I'm sure he's willing to give you tools and put you through a basic training for free. Am I right, Michelle? You're on mute. I can't hear you.
Yes, I can.
Yeah, good. I'm saying it now, so that when you go and meet him later and he asks you for money, you that he has already promised.
Well, I can teach for free. But if for me to prepare,
that's the reason why we have Techbiz. Techbiz is where we bring experts to come and give back to those who are just coming up, right? We really need to take advantage of all the resources we try to provide to you, all the connection and the networking we try to provide to you here. And before we go, we have just 2 or 3 more minutes left. I'm going to ask my question now, and I'm going to crave your indulgence, Mr. Segun, that please, I'm going to ask a question, and I want you to be able to identify the first person who was able to answer the question as correctly as possible. So I'm asking the question now.
Okay.
All right, I've asked a question. Oh, sorry, I think I asked, sorry, no. All right, so we have 1 minute to go, so please. All right, everybody, let's go. We have 1 minute to go. 1 more minute to go. Come on. Who's going to win today's credits? 2 questions. You need 2 answers. You need to be able to provide me 2 answers. So wait. Did she get it right?
Okay. Yes, I think the first person got it right. Yes. It helps to know your profit and helps you to know how your business is doing. Yes.
Awesome. Also, that is Obina Omuka. Thank you very much for joining us. Thank you very much for winning. I'm going to put send my number to you. This is, yeah. Thank you so much. So send me a message. Send me a message on WhatsApp so I can, with your number, phone number, and your line you're using, and I will send you 1,000 credit. Thank you so much for joining us. I'm so sad to leave you now, but I have to, because this means this is going to be the last Techbiz for the year, and I think we are closing on a high. Thank you so much, Mr. Shegun, for your time. Thank you for the knowledge
You're
of us,
welcome.
and thank you very much for everyone who wanted to join us. I really enjoy your company, and I can't wait to see you again next year. Thank you so much, and have a wonderful 2021, and I will see you 2022.
Thank you very much.
Take care, everyone. Merry Christmas and Happy New Year.